So, Mike, there's a lot of people out there. I think convenience has become, the new, the new currency. It's what people want. They want things done quickly, and so if someone's getting a mortgage, the expectation sometimes is they can go online, can fill out an app, and a week later they're closing on a house. That's not really how it happens.
No,
there's a lot,
there's a lot
because of what happened.
Process.
Because of what happened with the downturn, there's a lot of steps that come into play in terms of getting a mortgage. And what are some things people can do if they really do want to close as fast as they possibly can? Let's say somebody wanted to close in a week or two. What would be the most important steps? And again, there's no guarantee that they could, but what would be the most important steps that they would need to knock out even before they call the loan officer, and then secondarily as soon as they're talking to the loan officer?
Right. So one thing that you'll want to do is start collecting all your different documents. For most loans, you need about the same documents: a month of pay stubs, 2 years of W-2s, your bank statements, or wherever the funds are coming from. That's the main thing. If you're self-employed, tax returns. So kind of get all your documents together that you'll need. But the biggest one always when closing quick is talking to a lender.
Not just talking to a lender, but I got to be real.
Lender.
I got to be real for a second. A lender that actually has the ability to close someone quickly.
Right.
There are lots of lenders out there that can't.
Yes.
That just can't.
So
do some research on that.
Right. Unfortunately, there's really a lot of bad lenders in our industry. It's unfortunate. And most of them will tell you anything you want to hear. I hear all the time, if it needs a 30-day closing, for instance, oh yeah, we can do that. And everyone knows that they can't.
Yep.
They're especially the bigger banks. I'm not going to name any names, but I can think of two right now that always, and it's probably not the ones y'all are thinking of, that always tell everyone they can close in 30 days. But if you call other the same company in other markets, they'll tell you a minimum of 45. And it's the same here, they just don't tell people that. So, speaking with the lender and getting that process done before you even start looking at homes is a big deal. And there's a difference between just being pre-qualified and being, pre-approved or conditionally approved as well. A pre-qualification is very basic. It's quick. And 99% of the time, it will get you a house. A lot of list agents are fine and sellers are fine with a pre-qualification letter, and those are quick. I mean, if I'm not busy or in appointments, I can knock one out in 10 to 15 minutes. It doesn't take long at all. The pre-approval, the conditional approval is a totally different scenario, but a lot of people equate them as the same thing, and they're really not. So the pre-approval or conditional approval, whatever you want to call it, is when a complete file has been sent to underwriting. They review all your income, your assets, basically your whole credit profile, and say, yes, this works, and this is what it's going to take to get a final approval. So that's a true, pre-approval, which is about as far as you can go in the process. There's a lot of companies that don't offer that, though. A lot of companies won't underwrite without an address, or, a lot of companies don't even do upfront underwriting. They collect everything first, title, appraisal, homeowner's insurance, whatever else is needed, and then send it to underwriting, which sometimes delays things because they come back and ask for more. So, in a perfect world, it's a lender. Atlantic Bay, we do upfront underwriting. We'll do it without an address as well. And on those, we typically hear back, in 48 to 72 hours, which is still a really quick process. So having that in order, if you have the time before you go out and start shopping, and if you need a quick close, it makes the process that much more efficient if you do it up front, because you already know what has to be done, and in a perfect scenario, all that's left is anything pertaining to the house itself.
Yeah, no doubt about it, and I think that is crucial if you want to close really, really fast. Doing those things ahead of time and getting that knocked out before you even have a house. People, unfortunately, they do it backwards. They look for a house, then they look for a realtor, then they look for a mortgage person.
Right.
The reality is,
Right.
and it's no surprise that Americans do things bass-ackwards because they should go to the mortgage professional, find a realtor, then start looking at houses. Unfortunately, they think they know better, and I can't tell you how many times people lose money, make mistakes, cost themselves a house, and get bad advice because they do things in the wrong order. But the reality is that should be the order that people follow.
Yeah, well, you know, a few reasons for that too. You want to know your buying power, you know, what you can buy. You know, then on top of that, you know, if you can go, let's say to 500,000, do you feel comfortable with a payment in that price range? Because some people don't. You know, then you're looking at a house at 500, you don't like the payment, you drop down to 300, a payment you feel more comfortable with. Odds are you're not going to see a lot you like because you've been looking at a house.
And so
more
I'm about to fill everyone in on one of the biggest scams in the mortgage industry, and it's a scam because it's completely deceiving to consumers. Online calculators and national online mortgage lenders are going to have you fill out information, and they're going to shoot out a mortgage payment.
Right.
And they're going to shoot out a mortgage payment that a lot of consumers look at and think, oh, that's amazing, and I totally am going to go with them now. But the reality is that the mortgage lender doesn't have the control over your total payment because you're paying taxes and insurance usually in that, and the taxes and insurance depend on the property.
Correct.
Now, it's in there. You know, legally, it's not a scam because they have a little disclaimer at the bottom that says, you know, blah blah blah, APRs determine property taxes and insurance, blah blah, a bunch of language.
It's misleading.
That nobody ever reads.
Right.
Nobody reads that crap.
Right.
I mean,
It's
there's just
read.
no
Right.
one's reading it. So they get that and they say, oh, mortgage payment of $900. This is who I'm calling. And then they get a higher rate and higher fees. And then their taxes and insurance come back, and then the loan officer has to do an upsell and deal with a bunch of drama from that because the customer's upset because the payment you quoted me is $900, now it's $1,150 because they didn't realize a mortgage lender can't wave a magic wand and know what the insurance and taxes are going to be without a property. So, you know, it's a scam. Don't do it. Don't fall for it. Don't pay any attention at all to online mortgage calculators for your total mortgage payment. Only your principal and interest. And
Right.
then figure out your total payment when you pick a house. Because it is, you know, if you said, I'm going to buy a $200,000 house and my payment's going to be this, you're wrong.
Right.
Like, no one can do that. No one has that magic wand. It is impossible.
I tell everyone too, because the taxes and insurance can vary so much, or you might need flood insurance or homeowners association dues. You could pick out $200,000 houses,
And it varies all over the
every
place.
single one's going to have a different payment.
Correct.
You know, but
So
on
anyone
this,
that tells you otherwise, any calculator, any lender, oh, your payment's going to be in this range, wrong.
Right.
It's not. There's no way. It could be a house that's homesteaded. Maybe it's not homesteaded. Maybe it's in a flood zone. Maybe it's an older house and has higher homeowners insurance. It is going to vary dramatically. I'm not talking like, you know, oh, the insurance could be $1,000 or maybe $1,100. I'm talking like it could be $500 or $4,000.
Right.
Like it's a huge disparity. So don't rely on online calculator. Don't choose a lender because of the payment that they spit out at you because it's a deception. It's a lie. Wait until you have an actual house, and then go to all of them and get their principal and interest
Right.
payments and their closing cost fees
Absolutely.
to determine which one to go with.
And-
It's a big deal. I see people make the mistake all the time.
well, you know, one of the bigger ones that I see, because so many people start their home search here, is Zillow. You know, oh, this is your estimated monthly payment, but no one ever looks
No,
at
it's
it.
it's a
They-
scam.
they
It's a
always-
complete scam. And of course, they've got disclaimers so they don't get sued, and they've been sued a lot, so they got to put this language in there. But the reality is, it's so misleading. Do not rely on that information. Just don't. It's so misleading, and it can make you make the wrong decisions. So we're going to be back with our last segment here on WFLA News, wrapping up the Duncan Duo Real Estate Show.